Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged.
So now that Jerome Powell gave his speech, the FOMC expectations on the CMEgroup.com have officially updated, and with him leaving interest rates unchanged, now coming up for the 17th of September's meeting, there's a 54% expectations for the Fed to keep rates current again. So Jerome Powell going against everything that Donald Trump is saying to lower interest rates, pretty much screwing over all the investors that put money into the crypto market before the meeting. We saw a sharp pullback for Bitcoin, dropping from 118, almost 119K, all the way down to 115. And on the 15-minute chart right here, you guys can see it's getting bought up relatively quick, and we're seeing a bounce on the relative strength index. So if you guys caught that dip, drop a 777 in the comments below if you're able to accumulate it, as well as XRP as well too. We're going to be discussing that in this video. XRP dropped all the way to $3, and now it's rallying back to $3.10. So we're going to dive into the charts over the next few minutes and talk about the expectations going into the next meeting, what's likely to happen next, and some massive regulatory shifts that are taking place that you need to pay attention to. So if you guys are feeling blessed and you're still feeling bullish regardless of the short-term pullback, comment 777. And if you're going to become the first millionaire in your family tree, confirm it by hitting the subscribe button. Let's run it. Have you built a crypto portfolio over $1 million but want to access your wealth without selling any of your coins? Well, imagine unlocking up to 85% of your portfolio's value to fund ventures like real estate, to buy other projects in the crypto space that are undervalued compared to the projects that you currently hold, or to diversify into different DeFi yield opportunities. That way you can live on the interest without selling any of your crypto. Well, we've partnered with a leading global office offering non-recourse crypto loans for investors with portfolios starting at $1 million. The same company that is trusted by the world's largest institutions and investors because, as you already know, the billionaires don't sell their crypto, they borrow against it. So if you're ready to unlock up to 85% of your portfolio's value without selling any of your coins, and you have a portfolio with at least $1 million, then email us at team@bullrunners.com. You're going to see our email contact in the description below, and we'll get you connected with the company that has helped clients like ours north of $100 million borrow against their crypto without selling any of it. So reach out to start a conversation with our team right now at team@bullrunners.com, and we'll talk to you soon. All right, Bull Runners, welcome back to the channel. So if you haven't taken the like button and given it a tippity taparoo to sink the putt, we're buying Grandma's house back. Speaking of which, Happy Gilmore 2 came out. Just watched it last night. Thought it was pretty good. Obviously not as good as the first one. You know, it kind of reminds me of any time like Will Ferrell makes another movie like Anchorman 2. You know, it just gets, there's some funny moments, but I don't know. For me, it just didn't do it. They tried to make it more modern, but you can't beat a classic. Nonetheless, what we're focused on here today is how can we make money in the crypto market to buy Grandma's house back? And we're not beating Shooter McGavin this time because he was thrown in a psych ward. Instead, we're beating the Fed here. So let's look at Bitcoin's price chart and let's see what's happening here. And let's zoom out on the daily chart, because right here on the 14th of July, we saw Bitcoin rally all the way up to $123,000, get sold off rapidly to 115. And Bitcoin has just been getting rejected from this descending resistance. Now, there are these massive wicks to the downside where the bears have stepped in and just pushed price down, but the bulls are aggressively defending, you know, $115,000 all the way down to $114,000. And so with this consolidation for Bitcoin, we can see that the stochastic RSI has reset all the way down here below 20. And we attempted a breakout right here after Bitcoin rallied from 114 to 120. A lot of investors thought that the markets were going to break out at that point. Really what that was a bullish cross down here below 20. And just like I talk about in previous videos, sometimes we see a quick sharp recovery in the price chart, and the stochastic RSI does something like this, where it's a very clean bullish cross down here below 20 in reversal. Whereas sometimes it's a little bit messy, where we see a bullish cross, bearish cross, bullish cross, bearish cross, then reversal, and it kind of waddles around down here below 20. So how do you trade these ranges, and how do you know when the bottom is in to be able to buy? Well, just like I talked about in previous videos, we look for confluence on the chart. So for example, what would confluence be for Bitcoin to be oversold and ready for a reversal? Well, it'd be a reset on the relative strength index as well too. And so right now, while the stochastic is at 6.91 and 0 for the K line and the D line, the relative strength index is still at 54 right now, while Bitcoin just continuously forms lower highs. And ultimately, I don't really consider these lower lows because these wicks right here are a little all over the place. But depending on this next candle body close, if we close somewhere down here, that's not necessarily the best sign for Bitcoin, because the support to the downside is all the way at $112,000 to about $110,000. This would be the next stop for Bitcoin unless we break above this descending resistance. So right now, the momentum is in favor of the bears, and we have a very strong zone of support starting at 110 to 112. The next level is all the way down here at the previous highs that Bitcoin got rejected from all the way back in December of 2024 and January of 2025. So it wouldn't be out of the ordinary for Bitcoin to come down to this level. If this were to happen before the end of the year, ultimately what I would want to look for on the daily is some type of macro bullish divergence where the stochastic RSI would be forming higher lows if the price comes down here. I'm not saying that it will, but that would be something that we don't want to rule out. And if you haven't accumulated enough crypto yet to create generational wealth for the coming move higher towards the tail end of this year by like October, November, December, then any sort of dip should be seen as an opportunity for you to accumulate before the next move higher. Now, if we don't see a dip like this back down to this level and Bitcoin just kind of consolidates within this range right here and then breaks out, what this means for altcoins is Total 2's chart would absolutely explode. And what's happening with Total 2 right now compared to right here in March of 2024 is just a short-term consolidation before the next move higher. And if Bitcoin were to pull back to like 110, 112, or potentially 108, the stop for Total 2 is back at $1.28 trillion, as you guys can see, which was resistance all the way back here. And so when Total 2 broke out in November of 2024 and came all the way up to $1.23 trillion, we saw an aggressive backtest of this previous resistance right here from July of 2024. And so we can see this would be a very strong zone right here of demand at roughly $1.27 to $1.3 trillion because it was a very strong zone of support right here, strong resistance right here, also a very strong resistance at this level right here. And so if we see flash liquidations for Bitcoin over the next 30 days, I would just expect altcoins to experience some sort of crazy drop down here. Now, I'm not saying that that's going to happen. Again, right now the chart is still looking good because as we're consolidating in what looks like a symmetrical triangle setting up here, well, the stochastic RSI is all the way down here in oversold conditions. So for us to drop even further while the stochastic RSI is already oversold is unlikely. So if we look at the relative strength index on the daily for altcoins, we can see the RSI is at 61. Now, when we experienced that pullback in November of 2024 before continuing higher, well, the RSI did something similar. I mean, on that pullback, we went from about 80 to about 67 right here, and then we rallied back up again to about 75, and then we stayed above 80 for an extended period of time on that move. So just because the RSI experienced a short little pullback like this doesn't mean that we have to come all the way down here, because if we see a bounce to the upside, we could stay close to 80 or above 80 for an extended period of time. Even if I go all the way back here to what happened during the 2023 rally that took place, you can see the short-term consolidation right here for Total 2. Breakout, the price is chopped for a little bit. Then we break out higher, the price chopped for a little bit, form another bull flag. Then we break out higher, the price chopped for a little bit longer. Then we break out higher. Well, what was happening here was the price was forming higher highs, and the relative strength index topped out here at 83 and did exactly what's happening now. Pulls all the way back, except it pulled back a little bit steeper to 52. Then on the next rally up, the RSI bounced to 75. Then the price chart chopped around a little bit. The RSI did as well too. On the next move higher, the RSI formed a lower high. And so what was happening here with the relative strength index before this deeper correction before the next move higher was a bearish divergence. And so this is why we want to look for on the relative strength index is some type of bearish divergence as we come back up to retest the all-time high for total 2, which if I clear the chart for you right now and show you what's taking place, like I said in my previous video, this is not a topping signal from my point of view. Now I could be wrong, but just looking at the relative strength index, it topped out at 87, which is not a bad sign. That just means that the momentum, shifted from bullish momentum right here to bearish consolidation for a little bit. And so as we consolidate sideways for a little bit, yeah, it's possible for us to go a little bit lower, but inevitably I would expect us to experience a sharp move higher. Now, what that would mean is the RSI would experience a bounce on the next move higher. And the real key to understand here is that on that aggressive move on the 22nd of July, the RSI went upwards of 87. If we don't pass 87 on this next move higher before the next consolidation like this, and the RSI does not pass 87 and forms a lower high, and then during the consolidation does something like this, I'm telling you guys in advance here, be ready for this, because this would be the start of a bearish divergence before we see some type of blow off top and much bigger correction coming over the horizon to play out on the relative strength index on the daily chart. So this is what I would be looking for a major topping signal, is the next rally up for total 2, which is everything outside of Bitcoin. So Ethereum, XRP, every single altcoin. We want to be watching the relative strength index. And also we'll watch the stochastic RSI as well too. For example, if I go all the way back here to the previous one that I just showed you back in December of 2023, sometimes we don't see it, but we did see it. So it's actually stronger confluence right here on the relative strength index, and the stochastic RSI was forming lower highs. So that's even stronger of a reversal signal when you see this type of stuff happening on like the third point of contact right here on the stochastic and the relative strength index. You do not want to be buying into that rally right there, because the moment that you're seeing price making a higher high and it's like the third lower high on these indicators, or like the fourth, look at the relative strength index. It was the 1, 2 right here. It was the third high for the third lower high for the relative, and it was the second lower for the stochastic. You do not want to be buying into that. So just understanding this key framework right here as a fundamental bearish divergence like understanding for you guys right here, when we're making higher highs on the price chart, by the time we make like the second or third higher high on the price chart, and these key indicators are making the second or third lower high, you do not want to be buying this. That is a very dumb move, because then you experience a sharp pullback like this, and there's no guarantee that we make another bigger recovery. But had you bought that breakout, not even looking for confluence on the stochastic and the relative for some type of bearish divergence, you would have had to go through a 18, 19, 20% drop in your position right there. And you would have had to wait, a little period of time. Like if you bought that, you would have had to wait like 40 plus days. It's not the longest time, but if you want to get a better entry point, what you want to look for is bullish divergences. Now, on the contrary, a bullish divergence is when price makes a lower low and the indicators make a higher low. And so that's where we would need to zoom into more micro time frames. So if I zoom into the 4-hour chart right here, we can see recently that the price chart has been making lower lows. And if we look at the stochastic RSI, we can actually see that the stochastic RSI is making higher lows. So this might actually be a signal that the next move for total 2 is back within zones of supply or resistance all the way up here, or potentially a little bit below it in a symmetrical triangle. And so with this massive aggressive buy up wick right here, it's very similar to what took place through this phase right here. And it's not going to look the exact same. And sometimes you don't see bullish divergences. So in that case, for example, if the price is making a higher low right here, not a lower low, and then the indicator is making a higher low and the RSI is making a higher low, what does that mean? Well, there's tons of different nuance points here and different patterns, candlesticks, and price action that you guys can be able to understand. So inside of Altcoin Pro University, if you haven't gone through the Technical Analysis Essentials course, definitely do that. It'll show you how to lay the groundwork for your trading strategy to understand trading view, trend lines, horizontal, vertical supports, resistances, price range, date range, long and short position tools, understanding obviously candlestick psychology, and then going into moving averages and other oscillators and Bollinger Bands and how to use them, because there's really 4 horsemen of technical analysis, and that's the trend, price action, horizontal support and resistances, and volume. So if you're on a certain time frame, like the 4-hour time frame, and you're trying to spot different things like a bullish divergence, well, for example, like the bullish divergence that we're looking at right now that's setting up on the stochastic is there. However, the relative strength index is actually forming lower lows. So we're not really seeing confluence there on the 4-hour chart. So we would need to zoom in even further to the 1-hour chart and see if we can see any confluence of a bullish divergence. And sure enough, if we look at the low right here from the 29th of July to the 30th of July over the course of the past day, and we look at the stochastic RSI, we can see that the stochastic RSI is actually putting in a higher low. That is a bullish divergence. And if we look at the relative strength index, it bounced from 26 on that recent crash right there. It's actually a really good sign that the RSI bottomed at 36. This is confluence for a bullish divergence. And so we could actually see a recovery for a total 2 back to $1.5 trillion over the next day or two. It's definitely possible because of this bullish divergence here. Now, we're still in a downtrend though, forming lower highs. So until we see a break of a major key resistance, the trend is your friend. And so what would that resistance be? Well, it's the previous high in this downtrend. So it's $1.47 to $1.48 trillion. So I would say $1.48 trillion to play it safe. We would want to see this clear to see a trend reversal. And a trend reversal is just a new series of higher highs and higher lows. And so if we don't see a break of this descending resistance and a new bullish channel being formed to inevitably break this resistance, then, well, this recovery could be short-lived and we can experience another pullback for a total 2. So this is why patience is your best friend here. You have to give it time to play out, because as you can see back here on the 24th of July, well, we saw the lowest low in total 2, and we saw a higher low on the stochastic, and we saw an equal low on the relative strength index, but the RSI was down here at 26. And so that was a major breakout point. But notice here how when we broke out, we broke back into this zone at about $1.49 trillion that was support, now acting as resistance. You can see it was support all the way back here, support all the way back here. It was now resistance right here. This is where you have to be careful, because yes, we did clear this previous high, but a lot of the times these are bull traps, and a bull trap is when we clear a previous high and we attempt to hold back on top of it, but we see price break below it, stop a lot of people out, rally back above it. And so it creates a lot of indecision at a level like this, where we don't see price aggressively move above it. We just see it consolidate around it. So that's not a clear sign that we're going to experience a trend reversal, because as you can see on this aggressive green candle right here, we closed above it. And then on the hourly chart, we stayed above it for about 1 hour, which is this resistance right here. But then on the next hourly candle, we closed below it, and then we experienced a lower high above it. This is not a decisive signal that we're going to continue higher because of this candle body close right here below the previous high, not holding on top of it as support. And so you just have to patiently wait here, because usually we see the price come back down to backtest this previous low for an either equal low, a higher low, or some type of lower low before we inevitably make a recovery on out of here. And then we either look for a more macro setup for a continued like bullish divergence down here, or some type of hidden divergence with an equal low or higher low. In this case, you can see it was higher lows right here for us to rebound off of. It wasn't until we finally cleared the resistance and held it as support right about here and held on top of it for several hours at a time by the 27th of July that it was pretty conclusive that we were going to make a move a little bit higher back into these zones of supply all the way up here. And so right now, because we are still in a downtrend here, you just have to be careful on any attempted breakout here, because if we see the price push up aggressively and then just kind of consolidate like this at $1.48 trillion and not decisively hold above it, then we could experience some type of lower low or equal low or liquidity flush in the market, similar to what happened all the way back here. So like I just said, that's why patience is your best friend here, because with the relative strength index forming a higher low and now attempting to create some bullish momentum on out of here, we need to give it a little bit of time here to see how it's going to play out on the price chart, similar to what happened back here by the 25th of July of 2025. Otherwise, I would expect us to face some type of resistance around $1.48 trillion. So if you guys want to better understand how to look at charts, click the link in the description below, go to the classroom, check out the technical analysis essentials, and watch all of these videos after this one. Now, if we look at the XRP, the US dollar price chart, you guys can see XRP is still in a downtrend. We actually had a massive flush out back down to about $3 here, and we're recovering to about $3.10. But be careful here because XRP is still in a downtrend. And similar to, this chart is still looking similar to what happened to Bitcoin all the way back here until the 19th of July of 2021, where Bitcoin sold off and was just experiencing lower highs and inevitably lower lows down here, setting up for this bullish divergence on the daily, where the RSI was making higher lows, inevitably had the higher low right here on the 35th. This was a major sign on the daily chart, alongside the MACD as well too. You guys can use the MACD for bullish divergences, along with the stochastic and the relative for confluence. And so what are we seeing right now on XRP's price chart? Well, the MACD all the way down here is experiencing a higher low. But if we look at where the price chart was right here, we're actually experiencing still a higher low. So XRP's price chart hasn't put in a lower low beneath this wick right here at $2.96. In fact, we're just putting in higher lows. So this still could take some time to play out within this range, and we could chop around for a while, potentially come all the way back down here before we make a move higher. As long as we're forming lower highs right here, I'm not bullish on XRP until we see some type of positive momentum above the 50 moving average here, at least on the hourly chart. You know, look at Bitcoin. We're on the daily on the left-hand side of the screen. When Bitcoin finally broke the 50 and back tested it right here, this was a good reversal sign right here, because this sign right here was really just a fake out. You know, we rallied back into the 50. We didn't even come back above it. And then boom, we crashed back down here for Bitcoin. Now, XRP's chart, I am on the hourly. So we are below the 50. This rally right up here was above the 50 for a bit. We crashed down below it. So if I zoom out here and let's just go the 4-hour chart, you can see this rally above the 50 was short-lived. Now we still are below the 50 on the 4-hour. If I zoom out even further for XRP though, if we go out on the daily chart, however, this does paint a different story on the macro, which is why I'm still bullish on XRP for the rest of this bull run. Because look at the 50, it's at $2.76, whereas the price is at $3.10. And so we are above the 50. So it shows we're still in bullish momentum. We're still in a bull trend right now, even though, you know, we could come back down to the 50 moving average, which is pretty close to where we were back at the prior breakout on the 2nd of December. So in my opinion, the worst case scenario for XRP for the rest of this bull run is for us to come back down to the 50 and bounce off of it and maybe even go a little bit below it, doing something like this before a sharp recovery rally to the upside, because that's where this zone of demand would be for XRP at the prior breakout highs from December 2024 and even the complacency stage high. And also this level right here on the 14th of May, which is now resistance. So price doesn't move to an exact like price line of resistance or support. It moves within a range. And if you start drawing your supports and resistances within a range, then you can better understand how price action moves within that range. Because as you can see, this level right here, price only made it to $2.60 something cents, whereas right here is $2.83. Right here is $2.89. So it's not exact on the resistance, and that's fine. We don't need to be 100% exact. We can get relatively close. Same thing for Bitcoin right here. You can see this range of resistance was anywhere between 37,500 to 41,600, and then price dipped all the way back within this range that acted as both support and resistance for an extended period of time for like 5 months. And so for XRP, that would be this zone right here. In order to accumulate more XRP, I would want to see it either come within this range, or zooming in on the more micro time frames like the 4-hour or the 1-hour, I would want to see some type of bullish divergence where the price chart right here continuously marches lower like this, has a final flush out down here, while the relative strength index does something like this, inevitably putting in a higher low than the low of the 24th of July. This is what I would want to see. Also, look at the MACD. Since the 25th of July, we are starting an upward trend right here. And just because we're starting an upward trend on the MACD doesn't mean the downward trend on the price action is done, because it's setting up a more macro bullish divergence. And again, the bullish divergence, lower low on the price chart, higher lows on these key indicators. As you can see, the MACD right here was experiencing positive momentum while the price chart was in a downwards momentum. Even after this massive recovery rally after that sell-off, we just got rejected from this descending resistance and continued further down for Bitcoin. So right now, on this recovery rally for XRP, until we at least clear the 50 moving average, or until we at least clear and hold above $3.33 to $3.25, this level right here, unless we drastically break above that and backtest it, the momentum is going to be in favor of the bears. Now, I know that's not what you want to hear, but if you do want to accumulate more XRP, I'm not going to tell you to buy XRP. I'm not going to tell you to sell XRP. I'm just going to tell you what I'm looking for on the price chart. It would either be for XRP to come a little bit lower while experiencing some type of bullish divergence on the 4-hour time frame, or for XRP to experience an aggressive breakout and a back test somewhere above $3.30, similar to what we saw happen right back here for Bitcoin above the 50 moving average. So if Bitcoin pulls back further, then altcoins like XRP, Ethereum, Solana, Dogecoin, Cardano, Sui are just going to continue to pull back further, and that's completely fine. You have to completely shift the way that you think about it, because pullbacks are opportunities to be able to grow your portfolio more. You don't grow your portfolio while the markets are going up. You grow your portfolio by having a solid dollar cost averaging strategy on the way down while looking for divergences, looking for confluence, studying price action, subscribing to the channel, and paying attention to the news for macro market developments. Now, if you guys do want to see which altcoins our research team at Altcoin Pro University is extremely bullish on and which projects are going to experience the most liquidity when the markets finally do experience a breakout with Total 2, then those will be shared with you before we ever make videos about them inside of Altcoin Pro University. For example, our research team posted GOAT on the 13th of October of 2024 when it was right at a penny, and since then it rallied to over $1, 5,000%. That's like turning $1,000 into over $50,000. Our team called Pendle at only a $16 million market cap, or 16 cents, back on February 18th of 2023, all the way back here, and since then it's rallied up over 4,000%. That's a 40x. It's like turning $1,000 into over $40,000. Our team also called BitTensor Tau September 15th, 2022, before the token was ever even launched. And since then, Tau has rallied over 2,000%. That's a 20x. Our team even said Solana is most likely to be one of the easiest trades next year, and this was posted December 29th, 2022, on the day that Solana bottomed out at around $8. And since then, Solana looks like it's up over 2,500%. That's a 25x. It's like turning $1,000 into over $25,000. The list goes on and on and on. Our team called Sui, Ondo, and even some of the biggest cult-based meme coins like MOG back in July 20th of 2023, the day that MOG launched. So if you want to learn how our team is finding these altcoins before they explode, we just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University through the link below. And although we make no guarantees because crypto is definitely risky, guys, this is only $97 a month or $970 a year. If you want to save $194, getting 2 months for free and unlock some exclusive bonuses, just go through the link in the description below, get in right now, watch the 26-minute video covering everything that Altcoin Pro University offers to help you become the first millionaire in your family tree, if that's a goal of yours. And you can get started through the link in the description below right now, or you can go to bullrunners.com to take advantage of the bonuses we're giving you before they expire. Everyone is loving the community. They're loving the education. They're getting access to real-time altcoin picks first before we ever make videos about them. So click the link in the description below, watch the video, and I'll see you on the inside.